Now, Brian, going back to the way that you see the world, that'd be the Federal Reserve. We have some data out from the New York Fed saying that the flattening yield curve, something that makes me have fond memories of the spring of 2018 when we were talking about that.
So long ago.
Yes, 27% chance of recession priced in over the next 12 months, according to the setup right now. I mean, I don't think too many investors have been talking about a recession of late. We just got that great jobs number. We just had all-time highs in the market, but certainly on a day like today, people are going to notice this information a little bit more perhaps than they would have just a couple weeks ago.
Yeah, and to be fair, the New York Fed is basically using a one variable model where they basically take the spread between the 3-month Treasury and the 10-year Treasury. And we actually saw those Treasuries invert in March of this year, shortly before the Fed actually announced that it would be tilting towards having no rate hikes for the year. You can see the chart ahead of you is the probability that the New York Fed actually prices based on that spread, which is 10 basis points as of April 30th. Ahead of the 2007 financial crisis, that percentage was about 35 to 40%. So getting up to 27% is fairly notable, although I do want to mention that, again, this is just between, it's just measuring that one spread. For what it's worth, the Cleveland Fed also has a similar model, and they also use the 3-month and the 10-year. They have a 31% probability using the same metric. And again, for what it's worth, Bank of America with a note out this morning saying if you factor in a number of other factors such as trade and also just the current economic output as measured by GDP, the probability is a lot lower than that.
Can't have those one variable inputs,
Right, you got it.
It's a little sloppy.
Yeah. It's y equals mx plus b. You got to add at least a z or some other.
Yeah, what was it? We had a guest on recently, and you asked about a letter in the GDP calculation, and I was like, oh, come on, dude.
Was that me?
Yeah.
Oh, that was me. You know what? I said nx.
Yeah, you're like, hey, what about that nx input?
I blacked out during that. Yeah, it comes in waves.